Welcome back to another exciting episode. Welcome back, that is, to another exciting episode of the Breaking Bitcoin Market Update. Today is Thursday morning. It is January 18th, 2024. Hopefully you guys are doing fantastic wherever you happen to be in the world and however you happen to be tuning into the stream this morning. We've got an exciting show for you guys today. We're going to be going over some of the latest on-chain data from Glassnode, laying out and continuing to lay out evidence for which way the market might move, continuing to lay out our investment thesis and our trades for 2024, and overall continuing to look for opportunities. Got some airdrops for you guys today that I think you should turn your attention to this weekend when you get some free time. Plus, of course, we've got the Manta Layer 2 airdrop coming up next week. So with that all out of the way, if you guys have questions as we proceed, please drop them in the chat and we'll do some shameless promotion here in just a few minutes. Let's get right into this, guys. All right, let's get over to the correct scene. And here we go. All right, here's going to be our presentation this morning. This is the Breaking Bitcoin Market Report for January 18th, 2024. As I said, we're going to be going over a lot of Glassnode data this morning. So I want to keep you guys tuned in, plugged in to what's going on in the market. I'll share with you, again, the data that was shared in their latest report and my personal thoughts on this. So the first thing I want to talk about is the fact of the Bitcoin ETF decision and how the market has responded to that objectively. What does the data suggest? All right. So what we're looking at is we're looking at a Glassnode chart right now that tracks the size of the futures market versus the options markets, comparing it to the price of Bitcoin. As we can see, let me see if I can get my pointer here. There we go. So as we can see that around mid-October, we can see that everything really starts blowing up. Mid-October, of course, would be roughly the time that the Bitcoin ETF narrative became a narrative. And so we can see that open interest in the options markets, which is the blue line here, as well as open interest in the futures markets, which is the yellow line here, just absolutely exploded from mid-October until January. And we can see that quantitatively, that shakes out to be about $7 billion in Bitcoin futures open interest from mid-October to January 3rd, with $1.1 billion of open interest flushed out this week due to closed positions or deleveraged positions. Bitcoin options open interest in that same time period did increase by 6.6 billion. And as an options trader, this is just great to see because it's another indication of the growing maturity, the market depth, and the liquidity in the cryptocurrency markets that we so desire. Let me make sure we are correctly streaming to YouTube. And yes, we are. Shout outs to all of you watching this morning. Hopefully you're doing fantastic. Okay. Sorry, $6.6 billion in open interest increase. That's 70% increase in OI in that same period, with a huge deleveraging event, $2.3 billion flushed out this week as we were coming to that ETF decision. All right. So what does this chart say to me? Well, I mean, this chart just simply says that we saw, not necessarily that everything was priced in, but just necessarily that we saw rampant speculation. And we can see that in open interest leading up to the ETF announcement. We even kind of see this last minute speculation in both futures OI. We can see, this growth after we have this 14% reduction in options OI. We spike back up until the actual announcement date here. Same thing in futures OI. Futures OI had a bit of a deleveraging event here, but then we ramped back up and now we've seen those OIs come down. OI is still pretty high, like multi-year high still for open interest. So there's still a lot of greed in the system. Still a lot of greed in the system. We can see how significant this is if we actually look at this particular chart. This is futures open interest 1 day percent change. So now we're looking to see what is, what is the magnitude? What is the effect? How large is these swings in open interest? And we can see here, this red line delineates any swings of 2 standard deviations or greater. The lower line indicates any swings of 2 standard deviations lower. And we can see that there was a significant deleveraging event on January 3rd, where futures open interest did drop by 2 standard deviations. So this big deleveraging event, $1.5 billion in open interest closed out on a single day. And then we can see that open interest again ramp right back up. We see this excessive speculation surrounding the ETF from the 10th of January, the 11th of January up until the 13th. And then of course we had that big price decline, and we can see that the open interest has really been flushed out, a big flushing out of open interest, more significant than what we saw over here even, but back down kind of into that median. So again, We lots of profit taking, and this will become more readily apparent because it's not just who is taking profit or who is deleveraging, or excuse me, what quantities, but who is, right? Whether it's short-term or long-term holders. It will give us more indications on what we kind of expect for the markets continuing to move forward here. So here we're going to be looking at our annualized perpetual funding rates versus the 3-month rolling basis. So we're just looking, all this is a very helpful metric, and this lets us know how much greed is in the system, how leveraged traders are, whether they're net long or net short, because the orange graph in the background, the orange histogram in the background, is going to be the annualized perpetual funding rate. So as it is above zero, it's kind of a centered oscillator. If it's above zero, that means that funding is net long and that traders are net long and that they're paying significant amounts to shorts in the funding rate. And we can actually see that spiked up during that, right before that January 3rd deleveraging event that I showed you. Long traders are willing to pay up to 50% to shorts in funding to continue to hold those positions, which is what you will see. These indications, when you see perpetual funding rates really spike up high, it's almost always a good time to take profit. It's almost always the time when there's going to be a reversal in the markets, because that is your indication that, wow, man, people are really over leveraged here. People are really net long here. And they're probably going to get hit in the head. That's typically what happens. So you can just see, even on these little spikes that don't see as significant as this spike up here when we got up to above 48%, 50% here, you can see that we do have market corrections, because this black line is, of course, the BTC price. So you can see a downturn there, another spike here, another downturn here, another downturn. So anytime we really get these big punctuated spikes in funding rates, it typically goes in hand with a reversal. All right. So a nice contrary indicator that you guys can look at. You can use this in day trading, but it's also very, very effective here on the higher time frames to predict wider market swings. So perpetual funding rates have maintained a strong bias. We can see here from August to October of 2023, there was actually a healthy balance of longs to shorts. And then that just completely went out the window as traders just went net long with no regard. So traders are and have been net long. Now, funding rates, as we can see, we have this big deleveraging event. Funding rates have cooled off, but still remain quite high. So traders are still net long. So there is still a lot of pain and liquidations that can occur should the market continue to tick down lower, which I do believe it will. Complementing this, of course, as well, options implied volatility has shown the same ramp up from mid-October. Here we can see this. Options open interest had basically been in decline since May of 2021. Throughout the entire bear market, implied volatility had really ramped down. And then mid-October, when the ETF narrative became a thing, you can just see how many people decided to use the options markets to speculate around this ETF, right? Implied volatility spiked up all the way from 36%, tripled all the way up to 97% in this lead up to the ETF approvals. And then again, big sell-off, big deleveraging event. So again, implied volatility has really gotten crushed. And prices are way down, meaning that unless we can predict kind of another catalyst situation like this Bitcoin halving, Ethereum ETFs, implied volatility is now less attractive, but positions are also cheaper. So, all right, now we're going to get into really the crux of what is important here, in my opinion, and that is going to be, okay, we've had this rampant speculation leading up into the ETF, but what, are we seeing, and this is a metric that I continue to look at and have continued to look at and told you guys to look at, but this is, we want to look at the long-term holder statistics. We want to look at what percentage of supply long-term holders have versus short-term holders have. And if that percentage of supply begins to tick down, if we begin to see long-term holders take profits versus short-term holders take profits, like short-term holders take profits all the time. But when long-term holders, those who have held coins for years, begin to take profits, that's something we want to pay attention to, because that is an indication that whales, those sitting on the sidelines who are content to hold and hodl for most of the time, they're taking profits, they're selling into this market strength. And unless new demand is sufficient to absorb this sell side pressure, we're going to see a decline in prices. It's just simple math. So here we have long-term holder net unrealized profit and loss. And we can see that currently, right now at this moment in time, the average long-term holder of Bitcoin is sitting at 55% unrealized profit. The way that they have this graph is that is when this NUPL ratio, that's when this turns green. It's not as bad as blue. Blue is euphoria. Green is belief/denial, depending on whether we're going up or going down. But this is a level historically, and we can see here where bull runs have run into meaningful resistance in the past. All right. Here we have August 2012. Even back then in that early days, we ran into significant resistance, and you can see the market just traded sideways for quite a long time. I believe that was about 4 or 5 months before the bull run did continue. All right. Here we have a similar situation in June of 2016 when the bull market was beginning to ramp up. Here we reached that same 55% unrealized profit for long-term holders. And you can see again, the market just crabbed sideways for about 4 months. Again, in June 2019, this is the recovery after the 2018 bear market. And this is, again, the general fractal that we are following for how we expect price action to unfold here in 2024. But we run up into that 55% again. And here we have that big market sell-off that's punctuated by the March meltdown event of 2020. And then once we recover from the March meltdown and we start to kick off the 2020-2021 bull run, we again run into that same resistance and we move sideways for about a month. And we've just run into that same statistical resistance again and I believe that this will play out very similar to how it has in the past. We finally run into our first level of significant resistance. As you'll see in the next chart, we're beginning to see profit taking occur, very significant profit taking occur from long-term holders, indicating that they are selling into this market strength. And even though we do have, so one possibility is the fact that we do have these new ETFs, potentially there is this new level of demand that might absorb and continue the markets. Again, every moment in the market is unique, but we do want to be very well aware of this. And I think this is one of the underlying catalysts for why we can continue to see sideways or downwards price pressure. Here we go. Now, when we look at the Bitcoin long-term versus short-term holder threshold, so this is the quantity of supply that long-term holders own versus short-term holders. You can see that short-term holder supply has basically been, even though it's traded, it has been in a net decline since 2018 when it reached its all-time high. Conversely, we can just see that long-term holder supply, despite some, dips and profit taking here and there, has been on a steady track upwards for forever, right? Long-term holders have just continued to add to their positions. This is one of my fundamental base cases. Whenever I think like, man, should I continue to invest in Bitcoin? Like, is the ride over? Is this it? I just look at this metric and I'm like, wow, okay. People much wealthier and smarter than me are continuing to just add to their positions and hodl. That's what I should probably do too. So, but we can see that this is very significant, guys. The percentage of Bitcoin supply held by long-term holders has declined by 75,000 Bitcoin since November. All right. A short-term holder supply is beginning to tick up just a little bit during the same period in time. So again, we are seeing a little bit of a pause in profit taking. And while this may not look like much, when we compare this and contrast this to circulating supply, this number is very significant. All right. This spending by long-term holders is extremely significant. The revived supply metric has ticked up by +1 standard deviation. And this is the largest. Excuse me. Yeah, this is the Bitcoin realized profit 7-day exponential moving average. So this is allowing us to see how much profit is being taken by long-term holders. We are now witnessing the largest long-term holder profit taking event since the November 2021 all-time high. So percentage wise, more profit has now been taken selling into this ETF speculation strength than the long-term holders took profit at the peak of the market in 2021. Okay. Now, of course, qualitatively, those situations are different because this was a known catalyst. This was a known situation of strength to sell into versus November 2021 high. Like there were no clear indications that this was the market top, for the average individual investor. Now, profit taking is to be expected in bull runs, but the big question is, with this massive amount of profit taking that we're seeing from long-term holders, will the new demand be able to absorb it? If the new demand is able to absorb it, then we will just simply move sideways here for a month or so, 2 to 3 weeks leading up into the Super Bowl potential catalyst, and then we can continue moving up. If the new demand is not able to absorb, then we're going to see kind of the price action that we've been seeing. Like today, it looks like we might even break down if we can't really get a strong reversal off of these lows. Bitcoin is now plunging down into its lows on today's intraday charts. All right. So in summary, we definitely have a lot of things to consider as we are looking for immediate continuation of the bull market. Is that very likely at this point in time? No, I think that the most likely scenario is crab action sideways, or that more pain is in store, eyeing that $38,000 price target. That is our next significant level of support if we are continued to decline to the downside. So I don't think we're going to get this bump and run immediate movement to the upside. Again, we do have a potential Super Bowl catalyst coming up, but that's almost a month away. So we've got a good 2 to 3 weeks. here where I think that the best move is to be hedged. Obviously, I talked yesterday in yesterday's market report about the Ethereum relative value trade and where your attention should be focused as far as the long side right now. And I think that's Ethereum and Ethereum related tangentials, as well as it certainly is airdrop and altcoin season right now. So really take advantage of that. I think altcoins will continue to perform well while Bitcoin crabs and continues to move sideways here, if not breaks down. All right, daily scuttlebutt. All right, let's get into the daily scuttlebutt before a quick technical analysis, and then that's all we're gonna do for this morning, guys, for today's live stream. I've got a ton of stuff on my schedule that I've got to do. I've got a bunch of meetings this afternoon, and we're just gonna keep it nice and quick. Okay, so for those of you guys who have been following along with altcoin season and the airdrops that I've been recommending, we've got a big one coming up for you guys. This is the ALT token coming from Alt Layer. This is going to be launching on the Binance launch pool. So those of you who have access to Binance could take part in this kind of TGE/IDO opportunity. However, both Celestia, if you're staking Celestia, so if you got your Celestia and you held on to some of it or you held on to all of it and you're staking it, which I do recommend you do. And if you listen to me about EigenLayer and you're restaking any of your Ethereum or any of your LSTs on EigenLayer, you are going to be qualifying for the Alt Layer airdrop. So you're going to get the token for free from tokens that were already airdrop farming. Okay, guys. So Celestia, again, airdrop that many of us received. Oh, sorry, guys. I forgot to press the don't shut off button on my camera. It should be coming back any second. Now, there we go. Sorry about that. So if you got the Celestia airdrop and you decided to hold on to it and stake some of it so you could farm protocol tokens, and if you listen to me about EigenLayer restaking, you're going to get this token for free. For those of you guys who are not doing any of this or who haven't gone and gotten the EigenLayer yet, maybe there's an opportunity to do it for the snapshot. They haven't announced the snapshot yet, but you will be able to speculate if you have access to Binance by trying to get into the alt token launch pool. That is another opportunity there. So, all right, a quick update. Obviously, we talked about a potential bullish catalyst specifically for altcoins and also for XRP to a degree. Yesterday kicked off the Coinbase SEC hearing, and we do have a tweet here from Paul Grewal, who is the chief legal officer over at Coinbase, where he tweeted out, "Today we made arguments in our motion to bounce the lawsuit against Coinbase. Just, get rid of it. After hours and hours, this much remains clear. The SEC is continuing to claim broad authority over all investments while offering no limiting principle to its definition of an investment contract." A lot of, complicated words there, but essentially all he's saying is like, it's not going very well. So again, no final decision. We do have some decent precedent lately with the SEC not getting everything that they want and us getting some good regulation. And this is important because this is potentially going to be setting the precedent for how altcoins and alternative investments are going to be regulated moving forward. And again, as you guys know, I am looking for 2024 to be a year where we're going to be seeing a lot of talk about stablecoin regulation, and certainly the conversation on altcoin and launch regulation is going to continue. All right, a quick macro update from Charlie Baleo, saying that the Cleveland Federal Reserve Bank is forecasting a drop in CPI to 2.96 this month, which would be the lowest U.S. inflation rate since March 2021. Their core CPI forecast of 3.81% would be the lowest core rate since May of 2021. May of 2021 versus March of 2021. So again, this just continuing to talk about how 2024 is shaping up to be a good year on the macro scale. Of course, we do have this very complicated and convoluted situation about the quantitative tightening and the reverse repo facilities being drained. Again, by April, the reverse repo facilities should be drained, and then bank reserves would have to step up to begin purchasing the newly issued debt by the U.S. government, which is forecasted to have a negative effect on the stock market. But simultaneously, like nobody knows these things. So that's all the stuff that's kind of floating around. But if these things are known knowns, it's like, come on. Like, anyways, just continuing to keep you guys updated. But overall, that is good. I noticed this is a good airdrop / yield guide for EigenLayer and other tokenless projects that you guys can get an opportunity at. Again, it's airdrop season. I want you guys farming airdrops. Even if you're just doing it passively for an hour or so on the weekends, it's going to give you so much rewards this year. Again, like I said, I earned about $30,000 last year just from I didn't even do the hour a week. Like I barely tried to get airdrops last year. Like I just barely tried. And I still had some good wins. Ethereum season is here, says Wist, with a game-changing catalyst to restaking. So again, this is the eigenlayer narrative. This is the LST restaking kind of narrative that is certainly hot right now. And he's got a good list of tokenless projects that could bring massive rewards. So again, airdrop farming. So again, this is Wist_DeFi on Twitter. Just go search for him over there and you can find this guide. Pretty good guide. I recommend following the steps if you guys have the free time and earning yourself some free rewards. And we're going to close off today. We will do some quick chat Q&A and maybe I'll look at a chart or two. But I want to end the presentation today with this from Crypto Calo. Crypto Calo, good guy to follow over on Twitter, posts good trading content. So shout outs to Crypto Calo. He says, one of the hardest things about being plugged into crypto Twitter is constantly comparing yourself to others. It's easy to get FOMO from seeing people post massive P&Ls and share wins, thinking about the what ifs. Like, oh man, if I had just followed him on that trade, or if I had just like been in that group, or if I had just gone 100x on this. If you're struggling with this, you have to find a way to let go and focus on your own journey. Be happy for others when they win and let it motivate you to work harder. Don't ever feel like you have to catch up, because there will always be someone you have to catch up to. One of the beautiful things about this space, and especially at the point we're in now, is that there are endless opportunities still ahead of us. And this is just so important, guys. Listen, trading is hard, and trading in crypto is even harder. It is the hardest place to trade that I know of. It is so rewarding, but it is so hard because things just move so fast and it can be so overwhelming. It's impossible to keep up with everything, guys. You might look at me and be like, oh my God, that guy knows everything about crypto. I can barely keep up on like 2% of what's going on in crypto. And that's all I need to do. All I need to do is focus on the things that I believe are important. And that has been sufficient for me to make a successful career as a trader and an educator in the space. All right. I don't need to know everything. I can't possibly know everything. I'm not an expert in everything. There's many things that I'm bad at. Like, I'm not the world's greatest day trader, right? I really do struggle with discretionary day trading. Something that I'm doing. I'm trying to get better at it actively, but it's something that I'm just not naturally talented at. Like, I can do all the TA and I can do all the charting, but for some reason I just have some inefficiencies in my execution when it comes to discretionary day trading. And maybe it's because I'm not putting enough, whatever, right? For whatever reason. But there's other things that I'm really, really good at. Like, I'm very good at creating strategies. I'm very good at teaching. I'm very good at following my own rules. And I'm very good at saying no. I think that's one of my biggest strengths. There's so much that competes for my attention every day. And one of my biggest strengths is just putting the phone down, ignoring messages, and saying no. Like, I'm doing my thing. I'm doing the thing that I believe will bring me success. I'm really only focused on that. And you're on board or you're not. All right. And if you're not on board, like, you're not going to get my time and attention, like none of it. Because if you want to do something great, if you want to say yes to something awesome, you've got to be willing to say no to a bunch of things that are just okay. And that's really hard to do if you're sitting there without something that you feel good about. And what I mean by that is, if you don't yet have a trading strategy you feel confident in, if you haven't had a lot of success trading or investing, if you feel like you're really behind and you've really squandered your time, or you're just so out of touch, or, you know, whatever reason, you're seeing, and again, what Kaleo's talking about here, if you're seeing all these people post these big wins and you're like, oh my God, what am I doing wrong? Nothing. Forget about them. They're not living your life. They're not you. They're not walking your path. They're not living your journey. They're not you. And comparing yourself to them or trying to be them is just going to make you frustrated, and it's not going to bring you success. Step back, focus on yourself, appreciate yourself for where you're at. If you're like just starting out and you want to get like, and let's, you know, you're watching these traders that are making a bunch of money and you want to get there, it's not going to happen tomorrow. It's not going to happen next week. It's probably not going to happen next month. It might not happen next year. But you can slowly improve yourself 1%, 0.5%, 0.25% every single day, every single week. And I guarantee you, if you just stay on that path, if you just keep making small, marginal improvements every day, if you just try to get a little bit better every day, not a lot better, just a little bit better. If you do that for long enough, those things are going to snowball. And before you know it, the person that you can become is going to be unrecognizable from the person that you are now. The skills that you can have, the things you can accomplish, but it just takes time. All right. And for a long time, it's going to look like you're not making any progress. Trading is that way. I traded for years before I actually saw returns. All right. That's years of consistent losses. And if I would have given up, I never would have got here. Right. But I kept my head down. I celebrated my small wins, and I kept myself focused on my goal. And that is the only way I know to succeed, guys. So stop comparing yourselves to others. They're not walking your path. They're not living your journey. I don't care how smart they are, how more engaged they are, how much more money they have. They're not better than you. They're just somewhere different than you. And you can get there too. You just need to work at it. All right. Don't compare yourself to others. That's not the end goal. You have to live your life because you're the only one who's going to walk your own path with you. Period. I don't care if you're married, if you got the closest friends in the world, you live your life by yourself, you die by yourself. All right. And you need to focus on yourself. All right. With that being said, I think that's it. Boom, bam. Yeah, that's all I got for you guys. As far as the report guys, always remember to trade safely. Big 100x leverage longs are not going to pay the bills, guys. That's not consistent. It's not sustainable. Emotional discipline and risk management. That's what pays the bills as a trader. All right. Or an investor. It doesn't matter, guys. If you guys enjoy this presentation, you want to continue to see more free content like this, please help us out, guys. Like and subscribe. Leave a comment below with content that you would like to see in the future. If you would like to work with me and my team in 2024 to get better at cryptocurrency trading, to get better at cryptocurrency investing, to grow, build, and protect your wealth, check out everything that we do in our mentoring program, crackingcryptocurrency.com, or make sure to join our free Discord and get involved in the community, guys. Lots of ways to take place. You can also copy trade me on Fairdesk if you want to join me in my day trading journey. Links for that are down in the description. Okay, with all of those shameless plugs out of the way, let's let's pop over to our stream charting setup. Here we go. And let's just scroll through, check out y'all's chats. You beautiful people. Hopefully you guys are doing really well this morning. See if I missed anything. Nope. Shout outs to Alex81SG says, Pulse Chain saving my portfolio this week. You know it, man. You know it, man. Like I said, I'm just hodling, dude. ETH1, shout outs to you, my friend. Bob the Builder. Paul, the man is in the house. He says the profit taking metric is definitely a YouTube short. Hopefully my editors get on that stuff, man. Clip Justin stuff. Everybody's the real nah, man. I'm a low G. I'm a low G, bro. Magnus, good to see you, man. Listen, hey, Magnus, I know that I kind of dropped off on our conversation and communication. I apologize, man. I just did not have the time. I apologize. I know it's important to you, man, what we were talking about. I ran out of time and availability to do excess things. I'm so drowned right now in work, but I like that. But I hope that we can pick the conversation up when I'm a little less like hair on fire at the moment. All right. Eth1's farming the ALT token on the Binance launch pool with BNB. Excellent, man. So, okay, decent strategy, dude. Alex81SG, how key do you think this restaking narrative is going to be? My heart bleeds every time I have to do a transaction on Ethereum. I feel like I'm being robbed. Yeah. I think it's going to be big, dude, because with Ethereum being, the king of layer ones right now in the DeFi world, I mean, all the obviously there's lots of opportunities everywhere, but often the most profitable opportunities happen to be on Ethereum. Not always, but with staking being the way that we're doing things, I mean, anybody who's anybody is staking, and then anybody who's anybody is doing the LST. I mean, the liquid staking token narrative was absolutely huge, and that was all anybody was talking about for like 3 to 5 months. And it's not like that's not all anybody's talking about now anymore, because it's just become normal. Like, well, of course you're like staking and restaking your tokens when you're LST, and then you're dropping it over here to earn, and so redoing that on EigenLayer, I think it's going to be important. I think we're going to see probably a bunch of chains and a bunch of concepts like EigenLayer, where we have these modular blockchains that allow kind of for this novel feature of restaking. Again, it's kind of like double dipping, and I do feel like there's something maybe fundamentally wrong here. But again, I've talked to the nerds, and the math seems to check out. So, again, like, is it going to be the narrative to end all narratives? No, but it certainly does seem to be the narrative now, which means, you know how narratives are. They run for like, 2 to 3 months, and you can make a ton of money if you play the narratives right, but you can always ignore them because a new narrative will always come around. And Magnus got a winning trade today, man. That's awesome to hear, dude. That's awesome to hear. All right. Again, just briefly, let's just check, just give you guys my thoughts on BTC. Again, nothing really definitive here. Nothing's really happened. We're continuing to just consolidate and crab sideways following this heightened volatility, following the ETF launch. Again, based on the evidence that I've shared with you today, and nothing's really changed from a technical perspective. Always looking for a little bit more pain. Price to come down here to 38,000. But if demand is sufficient to kind of keep us here, then we'll just crab sideways until maybe post the Super Bowl, and then we'll probably continue to bump and run. But again, that is if we have this continued influx of demand. The ETFs seem to be quite positive, but we've got we've got Celsius sell pressure, 1.6 billion in staked Ethereum that's going to be unstaking. and being sold onto the market as they rebalance their portfolio to pay their users back in cash. We've got obviously kind of the Mt. Gox. That's really the only huge supply shock overhead. But then we've got everybody rotating out of GBTC. And as we already laid out yesterday, only a portion of those sells are going back into other Bitcoin ETF products. So a lot of profit taking happening right now. And if that does continue, then this will probably mark a Pico top. And we could go as low as back down to the 28s and maybe even potentially lower. You guys will recall my original hypothesis was that after our run, we'd have a big, 60 to 80% decline punctuated by a sharp sell-off in March. And then the bull market really kick off in April. So the more I look at this chart, I mean, really my gut tells me to just take net shorts and just to get, just to get options, get like $30,000 strikes for like March and kind of wait this out. So that's where my head's at now, guys. That's where my head's at now, guys. On the daily time frame, again, continuing lackluster performance. We are really just hanging out and grinding these lows, which is very scary. Again, haven't gotten a decisive movement yet, but it is starting to shape up, look like it. Hourly, this is kind of what I came into in the market, right? Seeing the sharp sell-off. Now, you guys know me. I am a trader, so I did scoop up longs here. All right, sharp move down, high volume. I did scoop up longs here. Just because I think that's the reasonable thing to do. I really don't want to short down here because I'm not much of a pre-breakdown or breakout trader. Those trades don't really work for me. When we're ranging like this, I prefer to take, these opportunities, big OI drops and high volume and take reversals back up into the range. And then, if we are able to climb up here a little bit, 46, 47, then I'd look to short there. I mean, I did short from here to here, but I did close my position out in this consolidation. Kind of wish I would have held it now, but we'll re-short if price can get up here to like the 45, 46s. And we'll just kind of monitor and watch. So yeah, intraday long continuing still. I did have one stop out this morning. So that's where we're at right now. And you guys can just see, just basics, like high volume, what has happened every other time we've had sharp sell-offs and high volume in this range, price rebounds. So we'll see. We shall see where price takes us. So today we're either going to get, just kind of a lazy float back up into the trading range, like, or tomorrow we're going to be at like 39, 38,000 if we break down from here. If we break down from here, we're going to 38,000 for sure. Like no problem. So, all right, guys, that's about all I've got for you guys today. I've got to get to my work. Thank you guys so much for joining me this morning for today's Breaking Bitcoin Market Report. If you guys have any questions, comments, concerns, hot stock tips, or death threats, please leave them in the comments section and I will get to them as soon as I possibly can. Please like and subscribe to the channel. It helps us out more than you could possibly know and helps us continue to make free content like this. If you want to get involved, crackingcryptocurrency.com to check out all that we offer. Make sure to join our Discord, guys. I will see you guys tomorrow morning for Friday's. Well, today was the penultimate report of the week. Tomorrow will be the final. It's always weird to say like penultimate and then the next word is not ultimate. Like tomorrow will be the ultimate. Doesn't mean final. It means best, right? Yeah. Anyways, I'll see you guys tomorrow. Trade safely, guys. Emotional discipline and risk management pay the bills. Cheers.